To do all of this, we first must agree on the language. And here's why speaking the same language matters. If we don't get this right, we'd all be visualizing something completely different. And that only leads to confusion, and we don't want that. But if we do it right, learning becomes clear and useful. The most important thing to understand is that learning to trade with the right terminology directly impacts our ability to read the market correctly and make money, which again, it's all we want to do. We want to read the market correctly so we can make money. That's why you're watching this YouTube video, because you want to learn a skill of reading the markets correctly and therefore making a little bit of extra money. Now, here are some words that we gotta know. And by knowing these words, we are equipping ourselves to speak real trader language. Now, I'm gonna go quickly through what buyers and sellers are, because we have extensively talked about this in the previous chapters up until now. But for those people that have randomly clicked on this video, and this is the very first time you're hearing these concepts, this one's for you. Buyers are the ones creating demand. So they are the ones pushing the price up, and they are also known as the bulls. On the other hand, we have the sellers. The sellers are not the one creating demand, but instead they're the ones creating supply. So they're not pushing the price up, but they're pushing the price down. And on the one hand, you have the bulls, which are the buyers, which means the sellers would be called the bears. Now, another word you're gonna hear a lot from many traders in the trading community is strong sentiment. There's a strong sentiment going on. And a strong sentiment fundamentally means that one side is clearly winning. If we were to translate this to the scenario of the tug of war, it essentially means that one team is yanking the rope far across the line, which would look something like this, where we can clearly see that one team is winning and even the girls are even the girls are falling, which means that there's something called weak sentiment. If strong sentiment is when one side is clearly winning, then that means that weak sentiment is when one side is barely winning. And when we translate this to the tug of war scenario, it means that yes, both teams are pulling, but the rope is barely moving across the line. And it would look something like this, where you see that both teams are really trying so hard, but the middle of the rope is simply not moving. This is when you have weak sentiment, like there's no clear direction that the rope is going to. Now, when we tie these concepts together, the concepts of buyers and sellers, and then the concepts of strong sentiment versus weak sentiment, we actually get 4 new concepts that guaranteed you're also going to hear very often. On the buyer side, you then have the concept of strong bullish sentiment. And in simple words, it means that the buyers are clearly winning. So if you have strong bullish sentiment, that means that you also have weak bullish sentiment. And that means that the buyers are barely winning. Now, translating this from the seller's perspective, a strong bearish sentiment would then mean that the sellers are clearly winning, which means that a weak bearish sentiment would mean that the sellers are barely winning. Now, other words that you're gonna hear often are the long upper wick, for example, where it's when a candlestick has a long vertical line above the body. So take a look at the picture below where you see a vertical line on top of the compressed rectangle. This is how a long upper wick looks like on your charts, which means that we also have something called a short upper wick, which is when a candlestick has a short vertical line also above the body. So the only difference is that the vertical line is short, but they're both above the rectangle, which means that we also have something called a long lower wick, which is when a candlestick has a long vertical line below the body. It kind of looks like a hammer, which means that we also have something called short lower wick, which is when a candlestick has a short vertical line also below the body. So the only difference is the length of the vertical line that is below the rectangle. People often talk about the market showing either strength or weakness. This is also something you're going to hear a lot. There's a lot of strength or there's a lot of weakness going on in the market. And it turns out that whenever people express themselves like that, it's usually from the buyer's perspective. So this means that if buyers are losing, people are going to say there's weakness in the market, even if the sellers are winning. So yes, the sellers are strong, but the buyers are weak. Therefore, it's being said that there's weakness in the market, which means that if the buyers are winning, people often say, hey, there's strength in the market, even if the sellers are losing. So whenever there is a sign of something, a sign of strength or a sign of weakness, try to see it from the buyer's perspective. Are the buyers strong? Then there is a sign of strength. Are the buyers weak? Then there is a sign of weakness. And disclaimer, I didn't invent any of these terms. This is just the language that traders use, and sometimes the best thing that we can do is to adapt. And that's exactly what we're gonna do. So now that we're on the same page with the terms, let's get our hands dirty and master some candlesticks.